principles that you kind of back. I've always been a sound money person. Going back to the 1980s, I always thought that what Reagan was doing was voodoo economics, what George Bush Sr. said, because Reagan was having deficits at the same time the economy was growing. I mean, throughout the 80s was actually a very strong economic period. The early 80s, 81, 82 wasn't great, but once we
All right. Hello, this is Jim Forsythe, Chair of Citizens for Sound Money. We're pleasure today to have Don Durrett of Gold Stock Data here with us. So welcome, Don. This is the first time having you on. Really glad to have you here.
Yeah, thanks for having me on. I've followed you on Twitter for quite a while. So when you hit me up, I definitely recognized you.
Great. Yeah. And I actually been on your website, Gold Stock Data, and was a subscriber. Lots of really good information. So why don't we jump in and first you tell us a little bit about yourself and how you came to do what you're doing today.
Okay. Let's I think I'll give you the short version. So sure. I've always been a skeptic of deficits, and that's kind of the sound money principles that you kind of back. I've always been a sound money person. Going back to the 1980s, I always thought that what Reagan was doing was voodoo economics, what George Bush Sr. said, because Reagan was having deficits at the same time the economy was growing. I mean, throughout the 80s was actually a very strong economic period. The early 80s, 81, 82 wasn't great, but once we got to 83, we basically took off. But Reagan kept the deficits high throughout that. And at that time, I basically was going, this is bad. This is not going to have a good outcome. I mean, it really impacted me. I was in my 20s in the 1980s. And so then once we got to the 90s, the Republicans said, well, okay, we're going to balance the budget. I'm going, yeah, this is smart. We need to get back to some common sense here. But then we got 2001. We had two things happen back to back. We had the dot-com bust in 2000, and then we had 9/11 in 2001. And after both of those events happened, everything that we talked about in the 90s went out the window. We never talked about deficits again. I literally never again. And I was going, what's going on? So I became a big time gold silver bug, right after that, and basically started my career buying gold. Well, I don't know if my career is the right word for it, but my portfolio buying gold and silver mining stocks, because of the absence of sound money, trying to ignore, the whole idea of, what economics really, the foundation of economics, sound money, right? That you can print prosperity. You can't do this. You cannot. And I didn't know this at the time. I learned later, but von Mises wrote a paper in the 1950s, and he said that if you create basically a false economic growth through debt, through stimulus, you either have to pay the debt off or you create a bubble, and that bubble eventually has to pop. And in other words, he said, there's no such thing as a free lunch. You can't print prosperity. It turns out von Mises was a genius, and his paper actually holds water. I mean, it totally makes sense. And then we got to 2007, 8, and Hank Paulson, we were still thinking that debt meant something when Hank Paulson went to Wall Street and begged them and said, look, I think it was $700 billion. If you don't give me $700 billion, the financial system is going to melt to the ground. And they gave him the $700 billion. They said, here you go. And he started doing bailouts. Well, that was the beginning of MMT in America. MMT started in Japan. But how I define, there's two definitions of MMT. One definition is the idea that if you have a money printer, then you don't have to worry about debt because you can always pay it off, because you can pay the interest, you can pay the principal through money printing. That's the kind of the definition of MMT. But I look at MMT as more of a, okay, if you take that idea, not necessarily a definition, you take that idea and then you put it into practice. That to me is what MMT is the idea that debt doesn't matter, but you put it into practice, which is what Japan did. And so that's to me is what MMT is the idea that debt doesn't matter, but you basically put it into practice. So when you put it into practice, you basically stop thinking about deficits. It's like, oh, 2 trillion. I mean, think about 2003, 4, 5, all the way up to 220 when we had a $1 trillion, $2 trillion deficit. Did anybody in Congress other than, Rand Paul basically say, we shouldn't be doing this. We shouldn't be doing this. But did anybody really vote against it or anything? No. I mean, what we just had in June was really the first time that anybody has really kind of said anything. McCarthy basically said, wait a minute here. We're not just going to give you a free lunch on extending the debt ceiling. But what he actually did was nothing. I mean, he basically said, okay, he did nothing, right? He's like, okay, you have an open ticket now. We don't have a ceiling until after the next election. So the end of 2024, they can actually spend as much money as they want between now and then. I mean, it gave an open ticket. I mean, it's been a joke. So MMT in action has started when Hank Paulson went there to Washington and asked for his $200 billion. And then they lowered rates, just like Japan did. They took rates down to, basically zero from 2009 to, 2016. And then they started to raise them again in 2016, and then whoops, and they took them back down to zero really fast, right? So that's kind of MMT in action, is basically low rates, printing money, don't worry about debt. This is the opposite of sound money. And so that's where I basically became, kind of focused on investing, on this idea that eventually gold's going higher. And then I started my website in 2012, and then I started doing it full time in 2020. That's kind of an overview.
Nice. So, you mentioned Mises and talking about, if you print this money, it's going to create a bubble. Where would you say these days that bubble is? Because we had the obviously the mortgage crisis, but where would you say that bubble has been created now from starting in 2008?
Yeah, I think that, we were able, if MMT in action didn't happen with the Hank Paulson, through Bernanke, through Yellen, if that wouldn't have happened, if they wouldn't have basically said, we're going to ignore debt and we're going to print whatever we need.
Right.
They kicked the can down the road about 10 years. And by doing that, by basically ignoring debt and blowing the bubble high, blowing it bigger and bigger. I actually thought that they wouldn't be able to do this, that they wouldn't be able to. The U.S. was smart enough to know that if you blow the national deficit up, national debt up to 30 trillion, that you can't get away with it. I thought we'd be smart enough to do that, but we weren't. I mean, it's like 9/11 just jolted this country. It took us off our footing. I think sound money actually broke in 9/11. And in 2007 and 8 were kind of easy. Paulson, it wasn't that hard for Paulson to get that $700 billion and kind of put this in motion. If you remember, they actually had the Hank Paulson $700 billion was just the start. After that, they did something called, I think it was TARP. There was about $400 billion. So they basically printed $1 trillion. So that was that started everything in motion. And then look what happened in 2020. In 2020, they did all these stimmies, right? And then the Fed started expanding their balance sheet. So the Fed's balance sheet before that was like a trillion, and then now it's up to 9 trillion. So they basically just totally been expanding their balance sheet, and they've gone away from sound money. And so now the bubble, we kicked it down the road 10 years. I actually think the bubble right now is bursting. And I think that, the confidence right now in Wall Street that we've entered a new bull market, I think that this is not a bull market. It's a bull trap. And this is a dead cat bounce. And we're not going back to 48, get a new high of 4,800 on the S&P. I don't think we will get above 48, maybe 45, maybe 46, maybe not that high. But I don't think we're going to get to hit the 48. And so when is it going to burst? Well, I think it's bursting right now. I think right now, basically the Fed is losing control where the Fed can do whatever they want to. For instance, I don't think the Fed can take rates back to 0%. That's what MMT kind of demands is 0%. I think they could probably take it down in 2020, this year, 2023. I think they could possibly take it down, the Fed funds down to 2%, maybe. And then next year in 2024, they're going to have a hard time getting it lower than 2%, because I don't think inflation is really going to go away. But, they probably, they might. I think a lot of people think they might want to try to get it back down to 0.1%, but it's going to be really interesting. But I don't think the Fed can do what they want to do anymore. Take it to zero and then print whatever they need, bail out whoever they need. So it's bursting once the Fed loses control, and I think they are losing control as we speak. And I've said I think 2024 is going to be the year that it's going to be kind of an end of era awakening for Americans, people like you and me who have lived through this whole era. We're going to see, something broke. We're not going back to normal. I mean, if you look at our inner cities, our big cities, and you see how they're declining, like companies are pulling out of San Francisco left and right. And it's not just for politics. A lot of it is quality of life and crime as well, which somewhat is politically related. But you can see this decline. You can see, the murder rate in Chicago hasn't really went down. It's still a big mess. Chicago's a big mess. So these cities, Portland, which we've always thought of as basically a pristine place, right? And now Portland is degrading. And you look at the infrastructure, the roads and the bridges in America. It's like, what's going on here? They're decaying. You look at our airports. Our airports are no longer, basically lauded. I mean, if you go back to the 1960s, America we were like the epic of the world. All of our airports were new. Now, 50, 60 years later, our airports are no longer new. In fact, they're falling apart. They're getting old. It's like, what's going on? What's happening to America? We're not on the ascendant, we're on the descendant. And next year, I think, is the year that we basically say, we got a problem here. America's no longer, the pinnacle of the world. In many respects, we're going to be, people are going to have empathy for us for how we've fallen. And it's kind of a sad situation what's occurring here. And a lot of it resolves around sound money, because America is really a corporation. It's all about money, making money. We started it in the 1800s. We were really the first country, the robber barons, our trains, in the 1800s. We were the first, country to really make it big. And now we've hit our pinnacle, and now we hit our nadir kind of thing. It's not pretty. And again, it does definitely revolve around sound money. And so I think that the U.S. economy and gold kind of go in opposite directions here. The economy goes down, gold goes up.
So, yeah, I would say like what you talked about, that decline since the 60s is, I think a lot of people attribute that to Triffin's dilemma. When you have the world reserve currency and it's fiat, that basically hollows out your manufacturing base, because since you can print dollars, you can afford to buy things overseas cheaper, and you wind up kind of giving away your manufacturing base. So hopefully, as we return to sound money, that gets reversed. I think we were talking about this beforehand, like, as sound money makes a resurgence, like how long do you think it'll take? It's going to be painful, right? But how long do you think to get kind of back on our feet, regrow that manufacturing base?
Yeah, I mean, you bring up a really good point, one that I didn't mention, and that's the hollowing out of the middle class. I mean, America really peaked on a kind of a class level in the 70s when you started the middle class in the mid 70s. The middle class started shrinking, and it really picked up in the 80s and 90s, and it continued this century. So the middle class is getting hollowed out, and now inflation is hurting, their spending power. And so the middle class is actually getting a double whammy here. I mean, their standard of living has been, they've been trying to hold it up through debt, and then simultaneously, but the earnings power hasn't kept up, and now the earnings power is taking a really big whack. And so hollowing out of the middle class is definitely occurring, and it doesn't seem to be coming back. And what you mentioned also about how our manufacturing base has basically, I mean, that's really what's led to the middle class getting hollowed out, in my opinion, is the manufacturing base basically being shipped overseas. What really blew my mind was I thought that Trump was smart enough, because when he ran as a populist, but he also said that he was going to bring back our manufacturing. And it really kind of blew my mind that he didn't, because it's not that difficult. It's like, was he not smart enough to figure out how to do it? Or were there people that basically stopped him from doing it? Now, what I mean was, it was easy to do, is the corporations weren't going to do it on their own. They had to have incentive. There had to be a reason to do it. They were fine with the current situation. Now, the perfect example, and I don't see why he didn't see this, because if you want to bring the manufacturing base back, all you have to do is go to the 1980s and the late 1970s, when Japan was basically rising. And they were becoming, basically, at one point, we thought they were going to basically catch us. Their economy was growing so fast. They were growing at such a fast rate in the 80s. We thought they were going to catch us. Well, what did we do to kind of slow down their momentum, if you will? Maybe people don't remember this, but we basically told them, look, you're not going to just import all your cars into America. You need to make some here. So they opened a factory in Tennessee. They started to say, okay, so they started making some of their cars here, and then they started making more. They started building more. But we basically told them, look, you need to make some stuff here. We put some pressure on them, and they started making stuff here. Well, guess what? We've never, ever put pressure on China to make their stuff here. It's like, or South Korea. It's like, wait, it's not that difficult. All you have to do, like I said, it kind of blows my mind, is, let's say that, South Korea, Samsung and LG, they don't make their stuff here. All we have to do is, say, look, we want you to make, let's say 5%. Well, so we're going to start out at 5%. So you don't make one factory here, right? 5% of your products that you import here, we want you to make here. And they start opening factories. It wouldn't have been that hard. And then he could have done the same thing to China. Said, look, you got all these plants where we want you to make, 5% here. If they did 10%, I don't think we have enough workers, right? But if they did 5%, and then went back to Japan and did the same thing, said, look, Panasonic, you're not making anything here. We want you to make 5%, put one plant in the U.S. It mystifies me. I think that globalism could have basically been, nipped in the bud to a certain degree by we could have made stuff here. And look at the problem we have. Raytheon yesterday, the CEO said, he was talking about all of how many, they make everything, they're a defense contractor, and they get all their stuff from China. He was talking about it. It's like, how did that happen? Right? It's like, how did we allow globalism to get to such an extreme? And to this day, no politician, I thought Trump was probably the only one that could have turned it. To this day, no politician has actually had a plan of basically turning globalism, off, if you will, and bringing the manufacturing base back. Trump just spoke about it. He just talked about it. He's, talk. But in the end, he never really brought any jobs back.
Yeah. Well, it's interesting. There's causes and symptoms of these kinds of things. I kind of feel that um, you can have tariffs and all that kind of stuff, but back with the gold standard, it kind of helped enforce trade balances a little better, right? So if one country's exporting a lot of stuff, then they're getting gold in that. Then they have a lot of gold, but not much stuff from elsewhere, and the value of the gold then goes down relative to there, and then other countries get more competitive, if that makes sense. So it has kind of a balancing effect on trade. But yeah,
Well,
I mean,
I don't think tariffs. I don't think tariffs are needed for America. Tariffs are needed for countries that need to protect themselves. America doesn't need to protect itself. I don't believe. It's a strong enough economy; it can stand on its own 2 feet. But what we should have done instead of tariffs is, like I said, if anybody that's basically making money off of us by making, importing stuff in, make them, let the capitalist system work, if you will. Just force them to make it here. It's not that difficult. We did it to Japan in the 80s. We can do it to anybody.
Yeah, that's so the other thing, I think we were talking about this before too, is it sounds like you see things playing out relatively quickly in terms of the dollar. But every fiat currency throughout history has failed. Do you think we're coming to that moment when the fiat system fails, or in some?
Yes, rapidly. I think that the Ukraine war was the trigger. The dollar system was already trending, away from the global currency, because we've been basically exporting inflation for years and years and years. What I mean by that is when we export these dollars through basically debt, these other countries acquire our debt, and those dollars are going to be more valuable than the local currency normally. And so the dollar has the effect of, making it weakening kind of the local currency and exporting inflation. So then when they try to use their currency, it doesn't go as far because the dollar's intertwined as well. The dollar's there as well. So the local currency is always competing against a stronger global reserve currency. And it's never been, beneficial in many ways to a lot of these emerging countries that can never really get on their feet, if you will.
Yeah.
And we're seeing that a lot in Africa right now. Like the presidents of Nigeria and Kenya have recently been speaking out against the dollar, because now the dollar's been the last year has been really strong, right? So now we're exporting inflation even more intensely. And so I always thought, and so now it's starting to pick up speed. But back to Ukraine, I think Ukraine was really the trigger that now is going to speed it all up. And I think it's inevitable that, so the BRICS, everybody's talking about the BRICS, how it's expanding. It used to be 5 countries, Brazil, Russia, India, China, South America. So it used to be 5, and now it looks like it's going to grow to 20 plus, in the next 12 months. So they become an economic bloc, a big economic bloc. They've literally bifurcated the world's economy, because they're not going to let the U.S. in. And I think that what's going to happen is European countries, Japan, South Korea, they're going to join the BRICS. I think the BRICS is going to just keep expanding. But guess what? The U.S. isn't going to be allowed in. And the dollar's not going to be allowed in, and they're going to create their own currency. So by us invading Ukraine, we basically pushed China away from us and pushed China into Russia's this economic alliance between Russia and China. It's not a defensive alliance; it's an economic alliance. And the economic alliance, as a matter of fact, defensively, I mean, those two countries they're like oil and water. China and Russia are actually fighting over Asia. Who's the king of the hill in Asia? They're actually not natural allies. The U.S. and Russia are natural allies because the U.S. is a natural ally with Europe, and Russia is a natural ally with Europe. But China and Russia are not natural allies, I don't believe, but they are economic allies. So they're using each other, and they're using each other to basically push the U.S. dollar out of global reserve status. China wants to be the king of the hill globally, economically. So they're using the BRICS and they're using Russia, and the Ukraine was the trigger to do that. So China's finally making steps towards getting away from this dependence on the U.S. dollar. They see the U.S. dollar as basically harmful to their economy in many, many different ways. One of those ways is being the U.S. kind of dominates global trade partnerships, trade treaties, trade policies. And the reason why we dominate is because the dollar is the reserve currency. And China doesn't like that because their economy is just as big as ours, and pretty soon it's going to be bigger. Why should the biggest economy in the world have to deal with this other country kind of dominating global trade? For instance, China wants to expand into Africa and into South America and into Central America. And those countries have all been somewhat under kind of the umbrella of the U.S. to a certain extent. So now China they're fighting against that old climate, if you will. And so China wants kind of they don't want just an equal playing field. They want to have a little bit of an edge, if you will. So the only way they're going to get an edge is if they make this BRICS economic alliance. So SWIFT, we kicked Russia out of SWIFT, and we also militarized the dollar to a certain extent. And we basically said, look, because SWIFT only deals with the dollar, and then we confiscated a lot of the Russian assets, the Russian rubles, and confiscated some of their assets in U.S. treasuries. I mean, and so it was a really bad omen for the rest of the world. They're like, oh, that could happen to us too.
Yeah.
And so it's like, wait a minute here. We don't want a country to be able to do that. And plus, everybody thought it was bad form. It's like, whoa, what are you doing? So now everybody's like, and now we're looking, we're going, why are these other countries supporting, Russia when they're invading Ukraine? Well, they're not necessarily supporting Russia. They're basically supporting this idea of an alliance against the U.S. It's a bigger story than just Russia. And so in the U.S. dollar is a big factor in that. And so now they're creating a new system to basically go outside of SWIFT that Russia can use, and a lot of these BRICS countries can use as well. And the irony of all this is that Iran has been involved in this. And so Iran has been, one of our, biggest enemies, lately, right, for the last, 10 years or so. We haven't been friends with Iran, and now Iran's, cozying up to Russia and China and Saudi Arabia. We're seeing this change. It's a sea change. And I think that it's going to keep going. It's not going to just go away. This is a trend that's going to expand. The BRICS are going to expand, and they need a currency. They can't necessarily, a good example is India. So India has rupees, right? Nobody wants rupees. So how do you trade with India, right? It's a big mess. And so Russia goes, we don't want your rupees. You give us your rupees, what do we do with them? Right? There's nothing to do with them. We don't necessarily want to just dump them and then we're hurting your currency, but we don't want to hold them, and we can't buy anything with them. So it's they have to have a new currency. And so they're working on different ideas, but I think they're going to come up with a digital trading currency. I don't think it's going to be necessarily a currency that's used internally within countries, but I think what it will be used is basically cross-country trade. But this is where it gets interesting. This is how I see it unfolding: is that there'll be a bank in, say, Hong Kong, that they can convert their currency, their local currency, like rupees or rubles. They can convert those into this BRICS digital currency. So let's say that they want to buy something from India. They basically say, okay, I'm going to give India I'm going to go and take my rubles, convert them into this digital currency, and then give India this digital currency. Then India can take that digital currency, send it over to the bank, convert it into rupees and bring it back, or they can hold it. So it's just like Coinbase. It's basically a digital exchange. You trade it in one currency like a stable coin, then you convert it to Bitcoin, convert it to dollars. I think that's the system that's coming. And the irony of all of this is that Bitcoin basically showed the way. Before, now Bitcoin shows you how easy it is to do something like that once you go to digital, because once you have a digital currency, once it's convertible, it's a currency. And the thing is, the beauty about this whole thing, what Bitcoin showed is that this convertible currency can trade 24/7, and it's very liquid. So Bitcoin is priced 24/7. It's priced every second. Bitcoin is repriced. And so this digital currency that they're going to create will be freely floated, freely traded 24/7. It's just like Bitcoin. And it'll be backed. So Bitcoin isn't backed by anything. It's backed by the security model, the Bitcoin network, safety. But this digital currency will be backed by all these other currencies that people have paid to buy this digital currency. For me, it's a no-brainer. I think that's exactly what will unfold. And that, once that is announced, I think two things happen. One, gold goes up $100 the day that they announce it. And second, the dollar goes down 10%. 10% is way too much. 3%, 4%, 5% the day they announce it.
10%.
So that's your rapid decline of the dollar once that happens.
10% down relative to other currencies, you mean, right?
Oh, I was thinking about the DXY, but 10% of the DXY in a single day, that's not happening, but maybe 5%.
Yeah.
But the thing about it is, if I'm right, if what I just explained is how they do it, it's the death of the dollar. It's game over.
Yeah, and but it's interesting. It seems like we're coming to this era of gold and silver have been money, and now we're in a fiat system. I'm wondering if some of these currencies remain where they're a currency, they're not backed by anything, but then by trading them into like an exchange for gold, that they still stick around. I don't know if that makes sense, but
well, let me interrupt you there because I wanted to bring this idea out to let people know how powerful this is. When Facebook tried to create a stable coin, the banks just went nuts. They basically took Mark Zuckerberg to Washington in a heartbeat and said, get him up there to Washington and you guys tell him, no, you don't even think about doing this. Do you remember that?
Yeah.
They shut him down and said, no, because Zuckerberg's idea was basically the death of the dollar. What he wanted to do was brilliant, but the banks and the government wouldn't let him do it. They basically said, look, we'll fine you into the ground. If you try to do that, we'll bankrupt your company. That's pretty much what they told him. You can't. They basically said, no, you can't do that. So this was his idea. His idea was to create a stable coin that was traded 24/7. That was basically the best currency in the world. So what he was going to do was he was going to bring in baskets of all the world currencies. He was going to take his stable coin, and I think he was going to call it Meta, and he was going to bring in all the currencies around the world, basket of currencies, maybe 50 currencies, and then all those currencies would be the value of the stable coin. So it's basically the perfect currency, and it was liquid and tradable, and everybody basically said, you're not doing that. Don't even think about it. We'll bankrupt your company. And he had to back off. Well, that is what the BRICS are going to do.
Yeah.
What does that tell you? It basically says, oh my God, they're going to do the Zuckerberg thing. And it's like in the dollar because that's stable. But I don't think they're going to allow that coin to basically be, used globally, because if they did that, it'll kill their currencies. So they're just going to create a stable coin that's backed by currencies and probably backed by gold, backed by commodities. It's basically going to be a stable coin that they can use for international trade. But what I'm talking about, the meta coin, is going to happen eventually. Someone's going to do it. But when they do it, it's going to destroy all the other currencies, because it's going to it's going to basically create a stable, why would you take risk of holding dollars or euros or anything else when you got a stable coin? You basically, right now, I'll give you a perfect example. Today, foreign countries are making loans in dollars because the dollar is probably the most stable coin. But why in the heck would you do a loan in dollars if you had a stable coin out there? Why would you take the risk? There's no reason. The dollar right now is declining in value. So why do a loan in dollars if you could do a loan in a stable coin that's secure? You wouldn't. You would use the stable coin. You'd use the meta. The meta would be the coin you would do the loan on, right? Makes sense. And so
yeah,
the euro dollar.
Yeah, I gotta really think about that, because I mean, so you can say it's a stable coin, but stable with respect to what? And
it's stable. No, you're not thinking it through. It's stable in relation to the global economy.
Gotcha.
Because it's basically every currency in the world. So the only way it goes down is if you have a global recession, which rarely happen. You take your risk, the risk goes away.
Yeah.
And the global economy, here's the beauty of it. The global economy, because you have all these emerging companies, the global economy on a whole generally grows every year. So your currency is actually getting more valuable. Whereas any other country, the currency is usually going down in value. So if you create a stable coin, that's the reason why they had a conniption when Meta wanted to do this. You're literally creating a legitimate stable coin. It's legitimate. It doesn't go down. It's stable. It's stable to the global economy. And if the global economy grows, the currency goes up. It's the perfect currency. But again, nobody will let anybody do it today because of, but it's going to happen at some point. At some point, it's going to happen. And what the BRICS are going to do, again, they won't allow it to go outside. They'll make it a trading coin, because if they made it for everybody, they would kill their currencies. You see what I mean? Like the rupee. It's like, I don't want that stupid rupee. Give me that stable coin you got. I'll take that one.
Yeah.
It's almost like gold, because gold is basically a stable coin to a certain extent. It holds its value over time. So it's similar to gold. And this is the reason why. So I'm a gold bug, but I'm also, I'm kind of a crypto bug too, because you can see I think about these things, about where crypto's going. I actually bought Bitcoin, actually, I don't want to say at a cheap price. And the reason why is because I was in IT for 20 years. And when I did my deep dive on it, I basically said, this stuff should not exist. It shouldn't exist. The fact that it does exist, I have to own it. It shouldn't exist. You shouldn't have basically a digital asset that has deflationary properties that nobody can touch, that nobody can mess with. That shouldn't happen. A government should have stopped that thing before it ever got started. It's like it was like the original kind of meta thing, where somebody should have said, "Whoa, you can't do that. You can't do that."
Yeah.
But they didn't stop it, and now they can't stop it. Nobody can mess with it. All you can do is make it illegal. That's all you can do. And if you make it illegal, that's to the detriment of your country. That's the reason why it's not illegal in the United States, because we're like, well, we make it illegal. That's not good for our American citizens. And so, it's a quandary, right? And so, okay, so now that I'm getting to the point that I wanted to make, and that is, I am a gold bug, but I'm only a gold bug for this current run. The current run, which is about to happen, is going to be epic, and it's never happened before. And this is the run that I've seen coming, and this is the reason why I've been doing this since 2004. Well, I started buying juniors in 2004. I started really building my portfolio in 2004. I see this run coming, and what this run is this paradigm change that we're seeing here. So the run is basically going to go anywhere from, because we're currently like, I think 1925 today, and we're down. It's going to go anywhere from $3,500 to $10,000. I don't know the top, but I can tell you that if this run, I think this run's going to be at least 3 years, and it could go all the way to the end of the decade. But after this run is over, I feel, and towards the end of this decade, I feel that crypto will replace gold, but not for a while. Crypto is going to have to really be institutionalized. It's going to have to be accepted globally. But if it is, and again, then what the BRICS are doing here with this digital currency is really kind of putting, it's legitimizing crypto in many respects. So if crypto gets legitimized and it basically takes off by the end of this decade, 28, 29, 2030, somewhere in there, I feel that it will replace gold. But by then, this epic run that we're going to have in gold will be over. I plan to sell to the top. I will be, I'll be at 80% out of my silver miners when we're at $100 silver. I'll be at 80% out of my gold miners at $3,500 gold. I'll only have a little bit left because I'm only riding this wave. I'm riding this wave. It's never happened before. Now, what I mean by it's never happened before, in 1980, you had this blowout run in gold. It went up to $850. Well, what happened when gold got to $850? It basically crashed. Then you had another run in 2011. It went to 1935, I think. What happened when it got to 1935? It crashed. Then in 2020, we got to 2000. We went over 2000. We've actually done it twice here, 2020, 2022. But what happened? It hasn't broken out. So we've never, ever had basically a run and it just kept going.
Yeah.
This is going to be the first time ever where you basically you break out to an all-time high and it just keeps going. And so that's what's going to happen, I believe, in the next 2 to 5 years. And after that's over, I think crypto is going to come to the fore. It all depends on what crypto does over the next 2 to 5 years. If crypto becomes institutionalized and becomes, adopted, don't expect gold to just keep going up, 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 and gold is going to be, your friend, if you will. I just tell people, don't ignore crypto, because crypto very well could be the future of money.
Yeah, well, I will say, I definitely believe, I think people in our organization believe blockchain is definitely going to be part of future money, whether that's through asset-backed digital currencies or unbacked crypto. But yeah, the blockchain's here to stay, I think, and that will be part of our future. So we can definitely debate about whether, gold on blockchain or other assets on blockchain will, take over monetary use versus straight crypto.
Right.
But yeah, I definitely agree with you. The blockchain is going to be here to stay.
Right. So this is something that people really haven't done a deep dive on, is what is the blockchain? Because, I have an IT background, so I didn't have any problem delving into it. It's a pain, and it takes time. It's a pain in the butt. I wrote a paper on it, a Bitcoin paper. It ended up being 100 pages long. It is a pain in the butt to read because it's a technology. The blockchain is a technology. I mean, if you try to understand how a Bitcoin transaction occurs, it took me more than 8 hours, more than 8. I mean, I don't know, 20 hours just to understand how a Bitcoin transaction works. When I did it, it's a technology. It kind of blew my mind how they actually secure the thing, how it works. But no, people don't want to do it because who wants to spend 8 hours, going into the details of how Bitcoin works? Nobody does, right? But you mentioned gold-backed gold-backed crypto, which I think is going to be very prevalent. I think that's going to happen.
Yeah.
And we're going to see other types of things. I think that the BRICS currency is basically going to have some gold. It's basically going to be a gold-backed token, not 100%, but it's going to have currency backing, commodity backing, I think gold backing. So yeah, that is a big part of it. But what blockchain can do is fairly mind-blowing. And it kind of blows my mind that the SEC and Gensler are trying to slow it down right now, kind of stop it in its tracks, going after, these tokens and calling them securities. Well, they're not securities. A security is basically a stock that's backed by a business, right? These tokens aren't businesses. They're basically decentralized, projects that have open source code. If it's open source code, it's not a security. I mean, it's ridiculous. And so, right. So America, this is another sign. I mean, I look at all these signs, right? Data points that show me that, America's in big, big trouble. So here we are at kind of a transition point. We got AI, which is kind of breaking out technology. We got blockchain technology, which is built on tokens. And we have the US government trying to basically slow it down. And is that really what we want to do? We got businesses that are leaving America right now that have the potential to be trillion-dollar companies, like Strike, Jack Mallers. He just left the country. We just kicked a potential trillion-dollar company out of America. What? How smart is that? It's not smart. And Jack Mallers is a brilliant entrepreneur, brilliant dude. And what he's trying to do with blockchain is very impressive. He's trying to help people. I mean, the bottom line is he's literally trying to help people. The guy's got a huge heart. I really like, that guy's heart. He's here to help humanity. He's an American. I mean, the guy lived in Chicago. And we kicked him out of the country. He said, "I'm sorry, I'm leaving. You guys don't want me here." It's a sad, sad story.
Well, I definitely see.
He went to El Salvador, by the way.
Oh, okay. Yeah, I definitely see hope at the state level. Like, states are starting to wake up, and like you said, it's kind of Wild West in terms of crypto, but that's not a bad thing. It's all these ideas competing with each other. And you don't want to, completely kill that. You want good ideas to develop, but I think states are starting to step up to the plate to kind of provide some protection for these things as well.
Well, yeah, I'm not really seeing that. I want to bring up this one last idea on crypto because I think there's some people watching this because sound money people, gold money people are like anti-crypto because they basically see it as fairy dust. They don't see the technology, how impressive it is behind the scenes. And let me give you an idea of why crypto has so much potential. Let's say that you're a business right now and you're growing and you need basically additional free cash flow. The only way that you can do it today is you have to basically go into a bank and basically beg for money, and banks aren't basically making loans. It's hard to get loans right now. With crypto, let's say that you have $1 million and you're a hodler of Bitcoin. Right now, you can, and you're a hodler. You don't want to sell that Bitcoin, but you have a business and it's growing, and you need, 50 grand in cash or $100,000 in cash. And as you invest that money, you're going to basically get it back. You just need it now. You got to put that money in. Let's say you want to start a new restaurant. The restaurant's going to cost you, 50 grand, 75 grand just to open the door, right? But then once open the door, once that money's down, you start getting cash flow back. So you got to, you got to say you got $1 million, you're hodling Bitcoin. Bank, they're not going to basically give you a loan on that Bitcoin, but this is the beauty that you can do this today, and it's going to expand. Is that you do not have to show any paperwork at all, no paperwork, and you can do this in 5 minutes. You can go to a place, and they will basically you take that Bitcoin and you transfer it into a smart wallet as collateral, and they will give you back like USDC or something, and you can convert that into cash, or they'll convert it into Bitcoin or whatever. But you use that. They won't give you the cash, but they'll give you something you can convert into cash through a bank. But they'll give you crypto that's basically liquid, and then within, depending on how long you have to wait for that money to clear, if you will, to get that cash. But you don't. My point is this: is that you can do it in 5 minutes without leaving your house, without doing any paperwork. There's no paperwork involved because all they care about is your collateral. So that is basically banking, crypto, blockchain coming. That's the future, if you will. Your collateral, instead of using collateral as a house or an asset, your collateral is going to be, generally Bitcoin. You put the Bitcoin up as collateral, get a loan, get cash, and then when you pay it back, you get your collateral back. It's in a smart contract, and you don't have to worry about getting it back, if you will. So that's going to be the future of finance.
Yeah. So whether it's Bitcoin or some other crypto or some other even a gold-backed security, I totally agree that like blockchain, that kind of thing, where you have a smart contract that can be enforced, and is I think going to make be very important going forward for sure. Especially the banking system is essentially a monopoly. You've got a single central bank, as the lender of last resort. So this blockchain technology, I think, really opens up options for people. So I think we were hitting close to an hour. I think we'll wrap up here. Is there any last words you want to get in?
Yeah. There's a few thoughts that subjects we didn't talk about. I just wanted to talk a little bit about, since you're sound money people, about where when is gold going to break out, if you will, and what some of these targets. So every Friday night, I basically I talk about my targets, and I talk about what's going to happen here. So for me, I think the number one thing to watch is the S&P 500, the stock market. So we have to wait for basically the stock market to throw in the towel. Like right now, the stock market has this idea we're going to get a soft landing. And so if we're going to get a soft landing, we're not going to get a recession. Everything's going to go back to normal. So when that narrative changes and the stock market goes down, that is going to be, I see that as basically the trigger for gold to basically break out. So until that happens, I think gold and silver are trapped here. And I think that narrative will change, I think, in either August or September. I could be wrong. It could go to October, November. But at a certain point, we're going to have to wait for that narrative, and then the recession comes. We really didn't talk about all the drivers or what the reason why I think we are slowing, and we're slowing into a recession. So those are I think that's the thing to look for, is keep your eye on the stock market. And then, once we go below 4,000 on the S&P, we're at 4,300. Once we go below 4,000, I think that's when the risk trade, people are going to start to be sniffing out that risk trade, and gold will be starting to get a bid. So gold down to 1925 right now. I think a lot of the reasons why gold is soft here is because of this narrative on Wall Street. We don't need no stinking gold. We got a strong economy. We got a strong consumer. So once that narrative shifts, I think gold and silver will go higher. Now in my lower, how down can silver and gold go? I'll end with these targets. So I think that 1900 on gold, I don't think that will hold. Heck, we're at 1925 now. But I've been saying this for a while now, that don't expect 1900 to hold. And then, so the next two levels is 1850 and 1800. I don't think 1850 will hold. A lot of people do. It's got a chance to hold, but I don't think it will. I think we're going to go down below 1850, but I think 1800 will hold. So I think my target is somewhere, we'll basically get a bottom somewhere between 1800 and 1850. Fingers crossed. I don't want to go below 1800. If we do go below 1800, I hope it's only for a month. If we go below 1800 for more than a month, that'll be really bad for gold, for us gold bugs. But if you're buying, you're going to get an opportunity to buy the dip. And then for silver, I think 20 will hold. So 20 to 21 is kind of where I think we're headed here. And the worst case, I think, is 18. I don't think we'll go below 18. If we go below 18, that'd be really nasty. But I'm hoping 20 holds here. And so those are kind of my targets, what to look for. So thanks for letting me finish with that, because I think a lot of people wanted to hear it.
Oh yeah.
So Jim, thanks for having me on your show. It was a great conversation. I think people are really going to enjoy it.
And where can people find out? Obviously, you've got Gold Stock Data behind you on Twitter.
Yeah.
Correct.
Just go to Twitter and at Don Durrett. Just look and make sure it has the blue check, because there's some people that copy me.
Yeah. And definitely urge people to check out the website. Like I said, I used to get a lot of good gold stock mining data there. Really well put together. And so for price predictions, I always joke that as far as I'm willing to make a price prediction is it's not going to zero. And gold and silver aren't going to zero, and that's actually a very useful trade to have these days. So thank you, Don, so much for your time.
Thanks for having me on, Jim.
All right, thanks.